107%. This is the profit made by this simple trading strategy after I backtested it for 7 months. Of course, 7 months isn't enough time to backtest a strategy and say that it actually works, but it can give you an idea of what could work if further backtesting was to be done. Now, over the 7-month backtesting period, the strategy produced a total of 48 trades with a win rate of 59%. It also had 4 consecutive wins against 3 consecutive losses and a maximum drawdown of just 6%. And of course, the gain on the account was 107% and the profit factor was 3.81. These results were made possible by risking 2% of the account size to make 5% per trade, hence the 1 to 2.5 risk-to-reward ratio. Now, you may be thinking,
well, that strategy seems super interesting. How does it work?
First things first, get on TradingView and load any forex pair or trading security that you like. And for the time frame, you can also do whatever time frame that you like to trade, because this strategy will work on any time frame. For me, I'm going to be using the NZD CAD on the 1-hour time frame. Now, the core indicator of this strategy, as you might have already seen on the title of this video, is the Nadaraya Watson envelope. To add it to your chart, you're going to click here, then type in Nadaraya Watson, and it's going to be this one that is Non-Repainting by JD Hordy. Now, as you can see here, this indicator looks really beautiful, right? However, we don't need all of this, so let's access the settings and change some stuff. Now, what is the Nadaraya Watson envelope? Well, the envelope consists of a pair of upper and lower bounds surrounding the price action. These bounds help identify extreme overbought and oversold conditions in the market. But there is a twist. This central line of this envelope isn't based on a simple moving average like most other envelopes. Instead, it uses something called the Nadaraya Watson estimator, which is basically a kernel regression method that smooths out price data, making it less sensitive to noise and more focused on significant trends. This basically means that the Nadaraya Watson estimator is going to keep you in trends longer compared to simple moving averages. And that is exactly how we're going to use it to trade. As you might have seen in the title of this video, we're going to use it to catch trends before it's too late. Here's what I mean. In a bullish trend like this one, there's going to be 2 types of trends. The long-term or the overall trend, which is this one right here. And then we're going to have short-term trends, which are basically these pullbacks and continuations. A pullback and a continuation. A pullback and a continuation. These pullbacks and continuations are the short-term trends that we're going to catch using the Nadaraya Watson indicator. In order to jump into this trend continuation move before it's too late, let's activate the Nadaraya Watson indicator. But before that, what broker do you guys use to trade? Personally, I use Henko Trade. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that it's actually a live account. The reason why I love Henko Trade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you that love high leverage, guess what? Henko Trade offers up to 500x leverage. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to Henko Trade using the link in the video description. Back to the video. So when the price touches the lower band of the Nadaraya Watson indicator, all we gotta do is wait for it to break and close above this middle line, and this middle line needs to be colored green at the time the price closes above it. If that's the case, we enter a long trade. And of course, we're gonna do the opposite for a short trade. Now, to minimize some of the losses produced by this indicator when the market is consolidating, let's add 2 more indicators to the chart. In the indicator search box, type in Zero Lag EMA and select this one by Kevin. Next, type in MACD, this one that says Moving Average Convergence Divergence. Double-click on the Zero Lag EMA and change the length to 300. On the Style tab, change the color to yellow and increase the thickness a little bit, and then click OK. Then double-click on the MACD indicator and on the Style tab, disable the MACD as well as the signal line, and then click OK. We're going to be using the Zero Lag EMA to identify long-term trends in the market. When the price is trading above it, that is a bullish trend. And when the price is trading below it, that is a bearish trend. The MACD, being a trend-following momentum indicator, is going to be used to ensure that we're only trading in the direction of market momentum. Now, to trade using this strategy, here is how we're going to do it. For a long trade, first, the price should be trading above the Zero Lag EMA to indicate a long-term bullish trend. Second, the price should pull back and touch or close below the lower boundary of the Nadaraya Watson indicator. After the pullback, we want the price to continue in the direction of the overall trend and close above the Nadaraya Watson estimator, this middle line. Now remember, during the pullback, the price doesn't necessarily have to close below this line. Even if it just touches it with a wick, that would still be okay. The third condition is that the Nadaraya Watson estimator, this middle line, should be colored green at the time the price breaks and closes above it. This indicates the beginning of a short-term bullish trend after this pullback, or a continuation of this overall bullish trend. Next, on this entry candle, we want to make sure that the histogram of the MACD indicator is colored green. This indicates the presence of enough bullish momentum in the market to push the price all the way to take profit. Lastly, to avoid trading in a consolidating market, we want to make sure that these price candles never touch the Zero Lag EMA for the last 5 days. To confirm that, you just take the measure tool, click on this very last candle, and drag it all the way until it says 5 days right here. In this particular example, you can see that for the entire 5-day period, the price candles never touched the moving average, making this a valid entry candle. We're going to enter a long trade here. The stop loss is going to be set below the most recent swing low, and for the take profit, we're going to set it at 2.5 times the risk. We let this trade run and take profit. For short trades, we're just going to reverse all the conditions. First, the price should be trading below the Zero Lag EMA to indicate a long-term bearish trend. Second, the price should pull back and touch or close above the upper boundary of the Nadaraya Watson indicator. After the pullback, we want the price to continue in the direction of the overall bearish trend and close below the Nadaraya Watson estimator, this middle line. The third condition is that the Nadaraya Watson estimator should be colored red at the time the price breaks and closes below it. This indicates the beginning of a short-term bearish trend after this pullback, or a continuation of this overall bearish trend. Next, on this entry signal candle, we want to make sure that the histogram of the MACD indicator is colored red to indicate the presence of enough bearish momentum in the market to push the price all the way to take profit. Lastly, to avoid trading in a consolidating or ranging market, we want to make sure that these price candles never touched the Zero Lag EMA during the last 5 days. We're going to enter a short trade here. The stop loss is going to be set above the most recent swing high. For the take profit, we're going to set it at 2.5 times the risk. We let this trade run, and it decides to hit take profit. Now remember, this strategy was backtested on only 48 trades over a 7-month period, which is definitely not enough data to consider trading with. If you're thinking about it, please do your own extensive backtesting and even forward testing before trading with your real money. Remember, past performance doesn't always guarantee future results. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.